Oliver, thank you so much for joining us here at Super Return International.
Thank you for having me.
It must be an amazing environment to be in. 5,000 of your global colleagues here. What does Super Return offer you in terms of that sort of insight?
Well, it's a great, unique circumstance of being able to connect with a lot of investors, a lot of peers, and just compare notes with people of what's going on, what are the latest market trends and the developments.
Obviously, there's been many discussions here about private credit taking the lead on the direct lending asset class. What would you put that down to, essentially?
Well, in the end, it's all demand driven. Our clients, for us at Thoma Bravo, that means other private equity firms whose deals we try to finance. They love what direct lending has to offer because they love the certainty we provide, the confidentiality, the speed, sometimes the structuring flexibility. So that's been driving the demand on that front. And that's why I think direct lending has been gaining market share from the syndicated market. That combined with a really interesting opportunity set in market share gains is the perfect opportunity. That's why I think you've seen the industry or asset class grow so much.
Obviously, you've always focused on software, and that's something others are doing too now. What do you think it is that makes software so attractive, and what is it that you do at Thoma Bravo to differentiate yourself when this is an area that others are actually tapping into too?
Yeah, great question. And to take a step back, as a lender, what are we looking for, right? We're always the cynics thinking about the downside. We're not swinging for the fences, can't make 3-4 times our money like a private equity investor. We're thinking about capital preservation. And therefore, if you think about the characteristics we look for, it's all about stability, predictability, visibility in revenues, high profitability, high free cash flow conversion. And there, the software business model, I think, is really, really differentiated because the SaaS subscription-based business model has multi-year contracts, usually with penalties and if people want to cancel early. You have price escalators built into that. All that creates that visibility and predictability in future revenues, and then importantly, converting that into profitability and free cash flow conversion is what we look for. At the same time, these companies also have actually pretty variable operating expenses. So if something were to go wrong, despite this great predictability, you can adjust pretty quickly and maintain your profitability. I think those are all characteristics that people love in software in general. Now then overlay that with us at Thoma Bravo, software is all we do. For over 20 years now, the firm has been exclusively focused on enterprise software investing across all different asset classes, private equity, growth equity, and private credit. And so synergizing and working with our colleagues and using that institutional expertise, I think it really differentiates us and gives us a special edge and competitive advantage to evaluate these companies and do better upfront diligence because we know those companies.
So deep expertise in a stable performing environment, if you like, to create that perfect storm.
Absolutely, because in the end, there's a lot of people who sort of pretend to be one thing. They market themselves in window dress, but it's our job as managers during diligence process to really go through all that. Are they as good as they're made out to be? And I think we have differentiated expertise, having done it for so long, different pattern recognitions, different experiences, and different resources available to us to get to the bottom of those answers.
How do you see this evolving and where do you see this going forward? Because obviously you said you've been in that space for quite a long time now. Where do you see the next big opportunities in terms of that? Because obviously we're going to see quite a lot of disruption from AI potentially.
Yeah, AI is certainly a very topical thing right now, and especially generative AI, because if you take a step back, AI, artificial intelligence, has been around for a long time. And especially we at Thoma Bravo, it's not something we're scrambling to figure out now. We've been thinking about it as part of our underwriting process, investment thesis, ever since we've been in existence. Because especially for a software company, artificial intelligence, data mining is all pattern recognition for big sets of data, so it's been core to that. Now, I'll be the first to say certain business models could be quite disrupted by generative AI. We don't think we're investing in those because it's been part of our DNA for a long time to evaluate that. But net, despite some uncertainty, we think being a great positive for our companies and be the next driver to increase profitability. Why? Because there's really 3 key drivers for a software company, from research and development, the coding, to customer support, to sales and marketing. And each one of those 3 different pillars, I think, can have benefits from artificial intelligence. Think about coding. Certain code will be automated. AI will do that for you, so the company can be more efficient, margin enhancing, profitability enhancing. On the customer support side, again, there's certain things that you can do better and more efficiently with this artificial intelligence, leading to higher margins. The same on sales and marketing. The sales force can really dissect the customer base, the target audience better. So net, we're super excited, despite some uncertainties, that this can be the next step function change to higher profitability for the right software company.
So many conversations around AI here at the conference, but also around holding periods in private equity. What's the current state of play with that, and how does that shape the opportunity set going forward in that sort of landscape?
Sure. I think there's plenty of statistics around there right now that the holding periods for private equity-owned assets has gone up. So let's first look in the rearview mirror, maybe what has that meant for us from an opportunity set, how we got here. As there were fewer new LBO transactions because of longer hold periods, there was still plenty of activity for us to participate in or to finance deals for add-on acquisitions as well as refinances. But I think this pent-up supply of transactions actually creates a really nice go-forward opportunity because we all know they have to transact at some point. The private equity business model works that investors give you money to invest in companies, make a return, and distribute that money. So you have some flexibility to prolong the hold period, but you can't play that game forever. So I think looking at maybe this bulge working through a snake, right? It's going to be a really good pent-up supply that when it hits the market creates a lot more financing opportunities for us in the direct lending space. So quite excited for it.
So the dry powder will be ignited at some point.
I guess absolutely. The 2.4, 2.5 trillion of dry powder that private equity has to get deployed. I guess it doesn't have to be, but usually gets deployed because who wants to return that capital, right? So we're excited.
And just when you're at a conference like this and you are having conversations around all of these topics, what do you hope to take away from your colleagues? There's 5,000 people here. What do you glean?
Well, number one, it's always a good sanity check of how we think about things. Not to say we want to be group thinkers, but hey, are we on base, off base? Are we contrarian? What is our perspective? And it's good to just absorb as many data points as possible. And there's a lot of smart people around the room with many different strategies, and they all have a place to be, and that's what's exciting.
Well, thank you for sharing your smart ideas with us today. Great to talk to you.
Thank you very much for your time. Appreciate it.